Welcome back everyone. This is our looking at the charts report. Today we'll be looking at 4 instruments. First is EURUSD, second is AUDNZD, third is GBPUSD, and fourth is GBPJPY. Enjoy the report. We start first with EURUSD for our chart. Now the currency pair's downward movement persists and even has intensified in the most recent sessions. At the moment, EURUSD is trading nearby levels previously seen back in July 2020. For the time being, we have seen a test of the S1 115.35 support level as it still holds up by not being breached. If the momentum downwards is to continue, then the next level lower could be the S2 114.70. For us to change our current selling view to a buying one, we would like to see EURUSD breaking above the R1 116.65 resistance and even head to the R2 117.45. The RSI indicator seems to be moving away from the 30 level currently, implying some buying orders may be present. Another way to confirm that a buying momentum has formed for EURUSD could be a breach above the downward trend line noted on our chart. Traders can focus on the ZEF economic indicators from Germany coming up on the 12th of October or the German HICP rates on the 13th of October. USD traders have the US employment report coming up on the 8th of October. While in the next week, we get the very important US CPI rates on the 13th of October. These events can produce notable price activity for EURUSD. Moving now to AUDNZD for our chart. AUDNZD has made a significant rebound in October as it has broken outside a downward momentum it was moving within since June. After the move seems to persist, we now keep an upward bias for the currency pair, which could be now aiming for the R1 105.60 resistance level. Higher, the R2 106.30 can also be used as a target in a more prolonged buying strategy. Levels we tend to note as supports are first the S1 104.50 line, which some stabilization had occurred in the past days, while the S2 103.75 could be found even lower. The S3 103.05 support is the lowest level reached so far in 2021 and had not been tested since April 2020, making it rather significant. With the average true range stabilizing nearby 0.0022, we could say the trend is most likely to remain. The most significant event from our perspective that can be used for trading the specific currency pair is the Australian employment report released on the 14th of October. Moving now to GBPUSD for our chart. Cable has moved in a sideways momentum after the strengthening of the pound that has taken place mostly in October. At the moment, the currency pair seems to be moving between the R1 136.40 resistance and the S1 135.50. We highlight these levels as they have been tested in the latest sessions but have not been breached just yet. Other resistances we have noted higher are the R2 136.75 level and at the top the R3 137.15 line, and these could be possible stops in a supposed upward momentum. To the downside, we note the S2 135.15 line and the S3 134.50 level, which was tested for the last time back in January 2021. The RSI indicator keeps moving nearby the 50 level, displaying some uncertainty. In our opinion, a breach of either the R1 or the S1 can determine the direction of the pair's movement, as the price action in the past weeks has formed a symmetrical triangle that seems to highlight this range. Pound traders can keep an eye out for the UK employment report coming up on the 12th of October and the UK GDP rates to be released on the 13th of October, along with the crucial UK manufacturing output rates. Finally, we close with GBPJPY for our chart. At the moment, GBPJPY is moving in a wide sideways motion between the R3 152.60 resistance and the S3 149.55 support, making them both notable levels for traders. For the time being, traders can focus on the R1 151.60 level that was attempted and temporarily breached in the most recent session. If the currency pair moves upwards, traders can turn their attention to the R2 152.15 level or even higher, the R3 152.60 levels that were both tested back in September. The support levels we have in mind are first the S1 150.80 level that was tested in the past sessions multiple times, proving its validity. Even more to the downside, the S2 150.20 line could be a target for the bears, while the S3 149.55 is, in our opinion, a more long-term level to be considered, as it was tested for the last time on the 1st of October. With the MACD indicator remaining away from the negative territory for the time being, the trend could remain sideways with bullish tendencies, in our opinion. As for economic data, in the days ahead, traders can focus on the Japanese current account figure coming up on the 8th of October, while the vital Japanese machinery orders rate comes up on the 13th of October. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. Please note, as an effort to support traders on as many fronts as possible, we are now presenting live streaming webinars through YouTube, and all our subscribers are welcome to participate. From everyone here at IronFX, wishes for solid trading.